Today is May 15th, 2026, and this is the Friday Fletcher Report. Fletcher is an algorithm I built after being frustrated with all the other options out there for investing data and such. I was frustrated with my emotions taking over my investment plan. So I built the algorithm to make decisions for me. Fletcher sends me a monthly report with signals, what to buy, what to sell, what to hold. It'll give me up to 6 holdings, no more, sometimes 3, sometimes 4. The overall goal of Fletcher is to outperform the S&P 500, not by a little, but by a lot. My name is Kyle. I'm an individual investor. I'm not providing financial advice. I'm not a data junkie. I don't have the bandwidth to go deep into analysis. However, I created the algorithm to do a lot of the thinking for me. It does not rely on AI, although there's probably an opportunity for that in the future. I started investing my own money January 1st with about 1/3 of my portfolio. With these Fletcher Friday reports, you and I can watch to see how Fletcher does with my own money. The Friday report is a transparent look at how Fletcher is doing. The good, the bad, the ugly. I'm going to share it all. Compare it to the S&P and other indexes in the future. If you have an index you'd like for me to compare it to, let me know. There are no signals or recommendations through the Fletcher report. That comes through a subscription. Fletcher this week had a little bit of a pullback. Granted, last week was amazing with 22% growth for Fletcher. This week there was a pullback. Kind of a rough week with Fletcher and other things happening in the market. It's been 2 weeks since our last signal, which was on May 1st. It's been a bit of a rocky week in the market, at least for Fletcher. I know there's a lot of things happening, up and down, a lot of excitement, a lot of fear. I figure it's what we can expect, a little pullback after last week. So let's look at some numbers. This week, Fletcher is down 7%. Now that's after the 22% increase from last week. The S&P was basically flat. Since the last signal, which was May 1st, Fletcher is up 13% compared to the S&P, which is up about 3%. And year to date, Fletcher is sitting at about 143%, and the S&P is at about 8%. With the increases from last week and the pullback this week, there's a lot of buzz in the news. I tend to try to watch those just for entertainment and not get too worked up about it. There starts to be a comparison about the dot-bomb era. What news source do you like to watch? I bounce around everything from Yahoo Finance to some people, some stations on YouTube. What I was experienced at the time was I was starting a internet company at the time, and thankfully we weren't leveraged. It was a slow growth, used my own money, very small company. We benefited from the dot bomb because people came to us when their host had basically gone belly up. So we were able to take on a lot of new customers. From an investing standpoint at that time, there was a lot of new digital activity. It was becoming easier to trade quickly. There were some pump and dump schemes happening. But one of the things that my friends and I did was watch certain stocks. We didn't know how to do analysis, so a lot of what we were doing was based on hearsay. And kind of a funny story is I needed to purchase a car, so I needed to sell stock. And so I sold one of our stocks that had had a huge run-up. And if I had held on to that stock for a few more months, I would not have been able to buy a car. I maybe would have been able to buy a bicycle. It was a huge change in price. I wanted to address a few questions that come up now and then. One of the questions about how volatile is Fletcher. Basically, it's going to have a lot more volatility than the S&P 500. We're talking about 3 to 6 stocks in the Fletcher signals. S&P obviously is 500 plus or minus. So there's a lot more volatility in Fletcher. And I would argue that with that volatility is risk, and with that risk is reward. That's why I see with our back testing how Fletcher has outperformed the S&P. Questions also come up about what are the stocks that Fletcher is signaling. They are publicly traded U.S.-based companies, typically $20 billion or more in size, strong, liquid, positive earnings. Some names you might recognize that Fletcher has signaled over the years: Carvana, Robinhood, Starbucks, Tesla, Meta, Palantir, even Nvidia. That pretty much does it for today's report. Thank you for listening. Let me know what questions you have. To learn more about the Fletcher algorithm, go to FletcherInvestor.com. Have a great week, and let's connect again next Friday.